What you would ask if you had a chance to call Graham Stephan, one of the most famous finance YouTuber and owner of tens of houses in Las Vegas that he bought for rent. I was so lucky that I got his personal number and now I'll call him. Okay, it's time to call. Hey Graham, I need your advice. I heard that housing market is growing fast. Price keeps increasing. I decided to buy a house in 2022. What should I know before doing this?
Here's what you need to know. First, the March 2020 interest rate reduction allowed homeowners to lower their monthly payments while simultaneously having more purchasing power at the exact same time, thereby driving up prices.
So, do you think that price will go up in 2020 because of supply chain?
Supply chain bottlenecks meant that housing supplies took longer to arrive, they were more expensive, and that cost gets passed on to the consumer.
Okay, Graham. Is there any chance that I could find a good deal and win in these market conditions and not to be screwed?
How do I say this? You're gonna be screwed.
Graham asked me to share with you one little cool trick.
If you hit the like button, there's some really cool confetti that appears. See, isn't that awesome?
Awesome, Graham. You are a magician. Thank you, man. Okay, guys. I hope you will not be mad at me. It was a joke and some level of editing skills.
I'm sorry, but the person you called has a voicemail box that has not been set up yet.
It wasn't a real call and I don't have Graham's cell phone number. But now it's time to explain in details what is happening with housing market and whether it's a good idea to buy a house in 2020. So the housing market exploded like fireworks last year and many of those sparks may continue flying in 2022. Last year an outstanding year with record low interest rates, the strongest early growth in a single family home prices and rentals, and historically low foreclosure rates and the highest number of home sales in 15 years. The current trends and the forecast for next 12 to 24 months clearly show that most likely the housing market is expected to stay robust, with many of the trends that propelled real estate to new heights last year remaining firmly in place this year as well. Last year, homeowners saw a market in which their properties sold so quickly and frequently and above asking price, as numerous home buyers fought for the winning bid. The housing market is coming off a year in which home prices in the United States increased by unsustainable 18%. Will the market continue to grow at this rate, or will it be a little less frenetic this year? So the housing market is even tighter now than it was prior to the spring 2021 housing frenzy. Even industry titans like Zillow increased their bullishness in January, increasing their projected home price growth rate for 2022 up to 16%. But interest rates are going high. So maybe that will stop the growth of housing market? According to Bankrate, as of April 1st, 2022, the national average 30-year fixed mortgage rate is 4.9%. A month ago, this rate was 4.21%. And one of the primary challenges that investors and buyers will need to address this year is rising interest rates. So first of 7 interest rate hikes scheduled for this year has already occurred. And according to the Mortgage Bankers Association, rates of 30-year fixed-rate mortgages are likely to hover around 4.5% by the end of this year. While today's rates are not outrageous by historical standards, they are much higher than they have been in years, which is likely to have a few knock-on consequences in the US housing market. And while quickly rising mortgage rates may dampen the strong housing demand somewhat, don't anticipate a halt to home price appreciation. A slower rate of appreciation is more likely. And one more critical factor that will influence the market is millennials. They're about to enter the housing market and their actions will have the direct effect on it. So the more they will buy, the more market will grow. But the survey of 2000 millennials found that managing money ranks dead last on millennials' priority list on certain activities. That was a research done by New York Post. They are more likely to play with pets, care of houseplants, surf the internet or think about dinner than think about their future house, mortgage and finances. And you know what is shocking? They devote about 150 more hours to social media during a year than they do managing their money. Almost half said they didn't even know how much money they have in their accounts. It may sound funny, but if we add to all of these huge student debts, COVID pandemic, inflation and other side factors, it seems that not all of the millennials will enter the housing market. And of course there is a question, will the housing market crash in 2022? Despite the interest rate increasing, it's pretty unlikely that the housing market will crash in the next few years. Experts say the current market is a way different than how it was around 2008-2010, the last big housing bubble that we know. And here is why. Mortgage providers now have very strict lending rules to help prevent defaults caused by risky subprime mortgages. Housing supply is still super low and probably will not catch up for a few years, so there is a little to no danger of home price dropping like a rock. And here is the deal, if the number of houses for sale was crazy high and the number of buyers willing to buy them suddenly plummet, housing prices would get slashed, and that's when a crash would be something to worry about. But that's not the case. And as long as new buyers continue to enter the market and there aren't enough homes for sale to meet their demand, home sales and prices will continue going up and the market should stay healthy. But someday prices will go down, of course. In many housing markets there is an extreme demand for properties at that moment, and there simply aren't enough homes to sell to prospective buyers. Home construction has been increasing in recent years, but they are so far behind to catch up. Thus, to see significant declines in home prices, we would need to see significant declines in buyer demand. The year 2022 is expected to be a healthy one for the housing market. And to make sure, let's look at what real estate professionals are saying and make some educated estimates about the future of US housing market. For instance, according to Zillow, the current typical value of homes in the United States is 331,000, and this value is seasonally adjusted and only includes the middle price tier of homes. In February 2021, the typical value of homes was 275,000. So home values have gone up 20% over the past year, and Zillow predicts they will rise 70% more over the next 12 months. And while Zillow's housing market forecast is bullish, it's also a bit of an outlier when compared to CoreLogic forecast. The CoreLogic Home Price Index forecast had the annual average rise in the national index and slowing from 15% in 2021 to 6% in 2022. Homes for sale should stay on the market a little longer with fewer people competing for them, which should keep prices from rising too quickly. So now the final question. If the market is healthy in 2022, is it a good year to buy a home? It depends, guys. The year 2022 could be a great year to buy a house if you are ready. It could also be a horrible time to buy if you are not. You are only ready to buy a house if you meet these qualifications. You are debt-free. You have an emergency fund of 3 to 6 months of expenses, or your monthly house payment will be 25% or less of your monthly take-home pay, or you have 10 to 20% for down payment, or you can pay the closing cost up front. So if you don't meet this qualification, it doesn't matter if the market is in your favor. Buying a home right now would end up being a curse instead of blessing. And it doesn't matter what I said or Graham said, it's only up to you.